There's a subtle trap that harms more traders than people realize. It's this: you're trading other people's convictions instead of your own. Let me be clear about what I mean. Every time you enter a trade based on someone else's analysis, whether it's a YouTube video, a Twitter post, a Discord signal, or advice from a trader you respect, you're operating without conviction. You're borrowing their certainty, their confidence, their reasoning, and conviction cannot be borrowed. It can only be earned. Conviction in trading isn't about being right. It's not about confidence or certainty or knowing what's going to happen next. Conviction is your ability to stick to a decision when the market moves against you. It's the internal compass that says, I plan for this, I accept this risk, I'm staying in the trade, even when your account is bleeding red. When you trade your own analysis, you have conviction because you did the work. You identified the setup. You assessed the risk. You decided the reward was worth it. When things go sideways, you can handle it because you knew it might happen and you made a conscious choice. But when you trade someone else's analysis, you have none of that. You skip the process. You didn't earn the conviction. So when the trade moves against you, and it will, you panic. You close early. You override the plan. You never had a plan in the first place. You just had instructions. And instructions without conviction are worthless. Here's what happens when you consume someone else's trading analysis. The moment you hear it, read it, or watch it, your brain gets infected. Not with knowledge, with their biases. Every analyst has a directional bias. They're either looking for reasons to go long or reasons to go short. They've already made up their mind before they show you the chart. And when they explain their analysis to you, they're not showing you objective reality. They're showing you a curated version of a market filtered through their pre-existing belief about where price should go. You watch them draw support levels. But those aren't the only support levels on the chart. They're the support levels that fit their narrative. There are 10 other levels they could have drawn that would support the opposite thesis. But they didn't show you those. They showed you the ones that confirm what they already believe. The same thing happens with indicators. They'll show you the RSI divergence that suggests a reversal. They won't mention that the same divergence failed 3 times in the past 2 weeks. They'll point out the moving average cross that signals momentum. They'll ignore the fact that it's giving conflicting signals on different time frames. They're not lying. They're just filtering information through their bias and presenting the filtered version as complete analysis. Now that bias is in your head. You didn't form it yourself through observation and testing. You inherited it. You absorbed someone else's selective interpretation of the market. And the problem is you can't tell the difference between your own analysis and theirs anymore. Their voice becomes your internal voice. Their bias becomes your bias. Their selective attention to certain data points becomes your selective attention. This is how traders end up staring at the same chart and seeing completely different things. They're not seeing the chart. They're seeing the accumulated biases of everyone whose analysis they've consumed. One trader sees a bullish setup because he follows bullish analysts. Another sees a bearish setup because she follows bearish analysts. Same chart, same data, different biases creating different realities. The infection spreads quickly. You start noticing the patterns they trained you to notice. You start ignoring the signals they trained you to ignore. You think you're doing your own analysis, but you're really just reproducing their thought process with slightly different words. Your mind has been colonized by their interpretive framework. And here's the worst part. You can have 5 different analyst biases rattling around in your head simultaneously, each one pulling you in a different direction, each one highlighting different data points, each one telling you a different story about the same price action. Your brain isn't analyzing anymore. It's refereeing a debate between other people's opinions that you've internalized as your own thoughts. The narrative hijack. Your brain doesn't process charts. It processes stories. When you look at a chart yourself, you see data, price action, patterns, information. But when someone else explains a chart to you, they're giving you a narrative. We're in an accumulation phase. Smart money is loading up. Retail is panicking. This is the bottom. That narrative sticks. Not because it's true, because stories are how your brain makes sense of chaos. And once that narrative is in your head, it's almost impossible to remove. You'll start seeing evidence for it everywhere. You'll ignore data that contradicts it. You'll hold trades for too long because the story hasn't finished yet. One sentence from someone else can override everything. Your plan, your system, your rules, your logic. All of it gets pushed aside because someone told you a compelling story about where the market is going and why. This is why traders who watch hours of analysis content often perform worse than traders who look at clean charts. They're not thinking clearly. They're thinking through a filter of other people's narratives. Their brain is cluttered with opinions, predictions, and explanations that have nothing to do with their own strategy. Let's say you find a setup. It matches your criteria. You're ready to enter. But then you check what other traders are saying. Half of them are bullish. Half are bearish. One says, wait for confirmation. Another says the move is starting now. What do you do? If you're honest, you probably freeze. Or you enter with hesitation. Or you enter and then immediately second-guess yourself because someone you respect had the opposite view. You're not executing your analysis anymore. You're trying to reconcile your analysis with everyone else's, and that's impossible. The only analysis that matters is the one you can execute without emotional conflict. Read that again. The only analysis that matters is the one you can execute without emotional conflict. If you need external validation to take a trade, you're not ready for that trade. If you're checking what other people think before you enter, you don't have conviction. If you're looking for confirmation from popular analysts, you're not trading. You're seeking permission. Here's how this plays out in real time. You enter a long position based on your own analysis. Support level held. Volume confirmed. Everything checks out. You're in at $100 with a stop at $95 and a target at $115. Your risk reward is solid. You're comfortable with the setup. Price immediately moves to $98. Normal pullback. You plan for this, but then you check Twitter and see that a popular analyst just posted bearish commentary. Nothing about your specific setup. Just general bearish sentiment on the market. Looking weak here. Might see further downside. Now what happens? That single sentence from someone else starts working on your psychology. You're thinking, wait, does he see something I missed? He's got way more followers than me. Maybe I should get out now. I'm only down $2. If he's right and this goes lower, I'll be stopped out at $5 down. So you exit at $98. You tell yourself you're being smart and protecting capital. You just save yourself from a potential $5 loss. You feel responsible, disciplined even. Then price bounces exactly like your analysis predicted. Runs to $107 by end of day. Hits your $115 target the next morning. You missed a $15 winner because someone else's offhand comment infected your conviction. You didn't lose money. You lost something worse. You lost trust in your own analysis. And now the next time you have a good setup, you'll hesitate. You'll doubt. You'll check what everyone else thinks first. That's the execution problem. Not that the other analyst was wrong, but that his words created emotional conflict with your plan. An emotional conflict destroys execution. Different scenario. You're in a trade that's not working. Your stop loss is clear. Price is approaching it. Your system says exit. Your rules say exit. But you remember that analyst you follow posted something last week about how smart money always tests stops before the real move happens. That narrative is now in your head. It's not from your system. It's from someone else's perspective on how markets work. And now, as price approaches your stop, you're not thinking about your rules. You're thinking about that narrative. What if this is just a stop hunt? What if I get stopped out right before it reverses? That analyst said this happens all the time. So you move your stop. Or worse, you remove it entirely. You're going to give it room to breathe. You're going to let the manipulation play out. These are not trading decisions. These are rationalizations. You're using someone else's narrative to justify breaking your own rules. Price continues lower. Now you're down significantly more than your original risk. You're hoping for a bounce, praying for a reversal, but it keeps going. By the time you finally exit, out of pain, not planning, you've lost 3 times what you should have lost. Maybe more. And here's the worst part. That analyst who talked about stop hunts, he was probably right that they happen. They do happen. But his analysis was general market commentary. It wasn't about your specific trade. It wasn't about your specific time frame or position size. It wasn't about your risk tolerance or account size. But you applied his general narrative to your specific situation, and it destroyed your execution. The execution clarity test. Here's the test. Can you sit through a trade while completely ignoring what everyone else is saying? Not just mostly ignoring, completely ignoring. No checking Twitter, no Discord, no YouTube, no scrolling through analysis while your trade is open. Can you execute your full plan, entry, management, exit, based purely on your predetermined rules without any external input? Most traders can't. They know they should. They tell themselves they will. But the urge to check, to validate, to see if anyone else is seeing what they're seeing, it's too strong. And every time they check, they introduce contamination into their execution. Someone else's words start mixing with their plan. Their conviction gets diluted. Their execution becomes inconsistent. This is why the best traders often remove themselves from information flow while in trades. They've learned that execution clarity requires information discipline. You can't execute your system while consuming everyone else's systems. The inputs conflict. The psychology fractures. The conviction disappears. Here's something uncomfortable. The traders you're listening to might not be any better than you. They might just be more confident. Confidence and competence aren't the same thing. Someone can present analysis with absolute certainty and still be completely wrong. In fact, in trading, the most confident voices are often the least accurate because accuracy requires humility. It requires saying, I think this might happen, but I could be wrong. But that doesn't get clicks. That doesn't build followings. So what you see instead are traders who present every analysis like it's a certainty. They use definitive language. They show you clean charts without the messy parts. They give you the illusion of control in an uncontrollable environment. And your brain wants to believe them. Because if they know what's happening, then the market isn't random. Then there's a pattern you can follow. Then you can be safe. But markets aren't safe. And following someone else's analysis doesn't make them safer. It just makes you feel temporarily less anxious while you hand over responsibility for your decisions to someone who won't be there when the trade goes wrong. What happens when you're wrong? When you take a trade based on your own analysis and it fails, something important happens. You learn. You can review your process. You can ask, what did I miss? What signals did I ignore? How can I refine this? You have data. You have reasoning. You have a feedback loop. But when you take a trade based on someone else's analysis and it fails, you learn nothing. You just feel frustrated. Why was he wrong? I followed exactly what he said. You can't improve because you weren't operating from your own framework. You were operating from someone else's, and you don't have access to their thought process, their risk tolerance, their exit strategy, or their actual conviction. Worse, when the trade succeeds based on someone else's analysis, you also learn nothing. You made money, but you didn't develop skill. You got lucky by association. And luck runs out. Skill compounds. The emotional stability factor. Trading requires emotional regulation that most people underestimate. You need to be able to sit through drawdown, to watch price move against you without panicking, to take losses without spiraling, to take profits without getting greedy. You can't do any of that if you're trading other people's convictions. Because when price moves against you, you don't have an internal anchor. You're thinking, why did I listen to him? What if he's wrong? Should I get out now? That internal dialogue destroys your ability to execute. But when you trade your own analysis, you have that anchor. I knew this could happen. This is within my risk parameters. I'm sticking to the plan. That's emotional stability. And emotional stability only comes from trading your own convictions. The moment you outsource your analysis, you outsource your emotional regulation. You're now emotionally dependent on someone else's thought process, and that dependency will destroy your account over time. Here's the cycle that traps most traders. You start by consuming analysis because you don't know where to begin. That's fine. That's learning. But then something shifts. You start checking analysis before every trade. Not to learn, to confirm, to feel safe. Then you can't take trades without checking what others think. You've become dependent on external validation. You've outsourced your decision-making. Now you're stuck. You're not confident enough to trade your own analysis because you never developed it. But you're not profitable following others because you don't have conviction in their setups either. You're in limbo. paralyzed by information overload and lack of internal clarity. Breaking this cycle requires a hard reset. You need to stop consuming analysis entirely for a period. Go back to basics. Look at clean charts. Form your own opinions. Make your own mistakes. Build your own system from the ground up. It's uncomfortable. It's slow, but it's the only way out of dependency and into autonomy. Another scenario, the paralysis of information. You're watching a setup develop. Your system is on the verge of triggering an entry signal. But you've got time. The signal hasn't fully formed yet. So you decide to do some research. See what others think about this market. You check Twitter. 3 bullish threads. 2 bearish threads. 1 neutral wait and see thread. You check YouTube. Someone posted a video a few hours ago calling for upside. Someone else posted yesterday calling for downside. You check a Discord you're in. Mixed opinions. Some people already entered long. Others are waiting. Others think it's a trap. Now your brain is processing 7 different perspectives, 7 different time frames, 7 different risk tolerances, 7 different systems. And your system, the one you spent months developing, is just one voice among 8. It's been drowned out. The setup triggers. You get your entry signal, but you don't take it. You can't. You're paralyzed. Too much conflicting information. Too many opinions. You don't know who's right. You don't know what to do. So you do nothing. Price runs exactly as your system predicted. You watch from the sidelines. You're not happy. You're not sad. You're just numb. Because this happens constantly now. You've consumed so much analysis that you can't execute your own anymore. Every setup is met with immediate doubt because you know someone somewhere has the opposite view. You've got information overload. And information overload doesn't make you smarter. It makes you slower, more hesitant, more dependent on achieving an impossible consensus before you act. And since consensus never comes because markets are adversarial and people have different objectives, you just stop trading. You watch, you analyze, you consume, but you don't execute. This is the final stage of borrowed conviction. Not just bad execution. No execution at all. Complete paralysis masked as being careful or waiting for the perfect setup. But there is no perfect setup. There's only your setup. And you can't see it anymore because you're looking at everyone else's. So what do you do instead of consuming everyone's analysis? First, you build your own. Start simple. Find one pattern you understand. One indicator you trust. One time frame that matches your lifestyle. Don't try to know everything. Just master something. Second, you trade small while you're learning. The goal isn't profit yet. The goal is repetition. You're building pattern recognition. You're learning how you react under pressure. You're discovering your psychological triggers. Third, you journal everything. Not just wins and losses. Your thought process. Your emotions. What you saw. Why you entered. Why you exited. This is how you develop self-awareness. This is how you build conviction. And fourth, you accept that it's going to be slow. You're going to make mistakes. You're going to miss trades. You're going to take losses. That's not failure. That's education. Every mistake is data if you're paying attention. Trading is one of the few fields where knowledge and results aren't directly correlated. You can know everything about markets and still lose money. You can know very little and be profitable if you execute consistently. The difference is psychological, and psychology is personal. Your triggers aren't the same as anyone else's. Your risk tolerance isn't the same. Your emotional resilience isn't the same. So how can someone else's analysis possibly work for you? Their conviction is built on their psychology. When you try to trade it, you're mismatching psychology with execution. It doesn't work. The only analysis that works is the one you've internalized so completely that it's not even analysis anymore. It's just pattern recognition. Automatic. Emotionless. Consistent. You get there by doing the work. By staring at charts until they make sense. By taking trades until you understand your reactions. By reviewing every decision until you've refined your system. There's no shortcut. There's no guru who can give you conviction. There's no signal service that can make you disciplined. There's only you, your charts, your decisions, your results. And the moment you accept that, the moment you stop looking for external validation and start building internal conviction, that's when you actually become a trader. Not someone who clicks buttons when the internet tells them to, but someone who makes decisions, owns outcomes, and improves consistently because they know exactly what they're doing and why. That's the only path to long-term success. And it starts with one simple decision. Stop listening to everyone else and start trusting yourself. Not because you're always right, but because you've earned the conviction to be wrong on your own terms and learn from it. That's what separates traders from followers. And if you want to survive in this game, you need to be a trader.